Welcome back to another episode of the XRP podcast. Today, we're going to be diving in deep with Roger Bayston, who is the head of digital assets over at Franklin Templeton. And we are going to talk about two things. One, of course, is the bombshell report coming in from the SEC and the CFTC. And that is both agencies playing nice right now. And we're starting to see asset lineup, 16 assets in specific, that were classified commodities. So I wanted to get Roger's take on that. The other thing we're seeing right now is some pretty heavy movement in the credit space. And I just wonder, how is this going to have potential impact on where these ETFs may be going? Because if we start to see the commodity, especially the commodity layer of what we're seeing now with XRP and a handful of other assets out there, then all of a sudden you have a credit layer potential. This could get interesting very quickly. And maybe this leads us into a potential hedge in the market as we see some pressure on it right now. I do want to remind you guys, if you are not aware, I think everybody watching this show is aware, and that is the XRP Las Vegas event is happening over on April 30th and May 1st. You guys can get everything you want to know. We'll have some great stuff going on there. Brad's doing a fantastic job. We will have a media center at this event, basically interviewing and doing live streams and all sorts of things. So you guys make sure, come up, say hi. It is going to be a barn banger, I think, for sure. A lot of big names. I won't be the announcer of those. I'll let Brad kind of do that and the event team. But I will say this, some of the biggest lineups that I have seen at crypto events in a long time, all happening in Las Vegas just in a little bit of time. So you guys get over there, get a ticket now. You can just jump over and grab tickets and get in on that, because it's going to be a place where you can really reach a lot of like-minded people and really understand what's going on in the market for sure. So a good one that you guys don't want to miss.
I want to take a minute, guys, and just invite you to join the Baron Market Edge private member group. You guys can do that by just clicking the link down in our description. This is your insider's edge to the AI and crypto money revolution, which is what we really focus on here on PBN. This is additional research that I do along with our team. And we have a pretty significant team on our research around not only what guides our episodes, but a lot of that research gets built into more content that I drop here on the Baron Market Edge. We do market trends and sentiment analysis, which can be anything from tokens to all sorts of strategies. This, of course, will also guide you over to our Telegram group, and we give this as elite community access. You get bonus content over there, including tax guides, as well as different kinds of asset guides out there that we drop all the time. This is your 10-year vision in action. All you have to do, of course, is just hit that little subscribe button or join the community and get in on it. It's absolutely free. It doesn't cost you a thing, so check it out.
Let's, of course, bring in Roger Bayston coming in from Franklin Templeton. How are you, Roger?
I'm good. How are you doing today, Paul?
Man, I'm recovering from a very bad whatever it was, but it was one of those that my son brings home. And as you can tell, still just kind of power through. But hey, we're getting there. Listen, big news this week. This was announced prior to the DC Digital Summit that happened yesterday and is still happening today. But it's the SEC and the CFTC coming together on really an alignment of what's going on for what is a commodity, what is not a commodity. And of course, XRP landed in the middle of that with a lot of other projects that really start to break in and make you think, is this the trigger switch for investors to finally say, well, no risk, we're ready to go? What do you think?
Well, I think it's at one of the steps, this clarity between the SEC and this collaboration between the CFTC and the SEC has been needed for a good period of time, getting away from some of what the opaqueness of what these interpretations of what these assets were and getting some real definition around them. Because as you know, when you're delivering products and services, especially on the legacy rails of the capital markets, and I would include the commodities markets kind of in that general capital markets definition. When you're delivering products and services and you're trying to stay inside of the kind of the white lines of regulations and not getting yourself in trouble for distributing things that are, maybe they're securities, maybe they're commodities. There's just a lot of rules around of all that. And the idea that we can get some collaboration and cooperation about what that is going forward, I think is just another step in that process. I don't think it's the single tipping point. There's a lot of things happening in the global macroeconomic, environment that is causing people to be concerned about
Oh
any
yeah.
risk asset whatsoever. But it's a great step for sure.
Well, the SEC, of course, clarified it. This happened, of course, the 17th, just a couple of days ago. A lot of people were surprised of the alignment that was so quick. And I even saw one of the interviews where they were talking to Paul Atkins, and it was like, they were kind of thinking that there was still some more work to be done. And they were like, no, this is the program. Like, we're done. This is how it's going to be lined up. And if you look at that, especially with the list of assets that they had available in terms of commodities, XRP leads the way. You've got Solana in there, of course, Ethereum, Bitcoin, several others, including Cardano, but a handful that have been around for a long time. And this starts to solidify a group of assets that could start making it more and more into TradFi portfolios. Now, my question to you is, if you think about those CFTC assets that were just listed, and you look at the rest of the market, because there's still some good quality projects out there, do you think institutional and even sophisticated investors will look at this and say, that's the basket we want to play in right now? Or will we see risk still going into some of these other projects?
Well, I think in a very simplistic way, that's exactly what, could and should happen is we have clarity on these particular assets. If
Yep,
we own them, if we, however we own them, most institutional players, quite frankly, want institutional quality custody,
exactly. Yep,
associated with it. And if you're a custodian that's growing your business and wanting to grow in this business, now you have a grouping of assets that you can specifically think about building your operations for, because there's just a lot of different components when you're
yeah,
talking about infiltrating, institutional portfolios with assets. Custody is paramount about all of them. Where are the assets held? Do we
exactly.
trust that they're held in safe harbor some way? But it does give all of those legacy players, the Northern Trust, the State Streets, the
Yep.
cities, the all of those actors who have had these massive custody businesses for literally centuries now. It gives them an understanding of what they need to be building toward and which assets they need to be focusing on.
Yeah. Obviously, this rolls really into you guys because you have a lot of products that fit right into this bag. And you look at the investors that are coming to you every day, and they're looking at digital assets now, maybe for the first time because of this, landmark kind of cooperation. Are you starting to see people ask about this now? I know it's only 2 days old, but I'm just kind of curious. Are you ready for that?
Well, we have been prepping this space for a period of time. I mean,
Yeah.
this is the SEC and the CFTC talking to each other is not. I mean, that's been news that has been, you know, you know, around for a period of time. They've spoken about, and now they've really come to some, to something that the market can interpret
Yep.
in a more solidified way. And so this is just kind of on that path of that. The framework that really institutional investors are looking at are what are these assets?
Mhm.
We're identifying if they're not securities, they're not equity, and they are commodities. What are they? How do they actually work and fit within an overall portfolio? What are the,
Yep.
covariances that they have with other assets? What do they, what kind of attributes, what kind of vehicles can we own them in? Obviously now with the ETFs, that cost creates a very, very cost effective way for them to own them, an
Yeah.
expression. But a lot of investors, quite frankly, still don't understand what a blockchain does. And so, therefore, the cryptocurrency, which is the native, you know, transmission of the GDP inside of that blockchain environment, they don't know what that is. And I think the real tipping point is when there is going to be far more integration of blockchain into, kind of that as an information utility
Yeah.
apparatus inside of businesses. And once they begin to understand that, I think you're going to be unleashing more and more investment into these networks, which is kind of a new opportunity, quite frankly.
Yeah. I think that's well put because you're right. It is a new opportunity and it starts to represent maybe a new thinking from this next generation of it? I know a lot of family offices, a lot of private investment advisors and RIAs. They are really, there's a lot of them that are under the age of 40. So they understand this pretty well. And they've been kind of chomping at the bit to get going. Now they have some vehicles to really come to their investors with. So this could be one of those trickle down moments that we
You know,
start to
but
see some movement.
what I'm reminded of is reading books by, the famed Fidelity Magellan manager Peter Lynch all those years ago. He's like, if you wear Nikes, maybe you want to buy Nike stock. You know, I guess the same thing applies for Warren Buffett with his consumption of, Dairy Queen and owning Dairy Queen
Uh,
stock. The
okay.
reason I'm bringing that analogy up is because I don't think yet a lot of institutions, organizations understand how they can use these distributed ledger technologies, these
Yeah.
record keeping systems inside of their information based businesses. And I think that is the thing. When you start consuming, when you start using XRP, the network itself to solve business problems for you, to help
Yeah.
you to create efficiencies or create new utility or opportunities. That becomes the unpacking point where I think we're like, aha, I'm using this network. I need to use XRP to append, records onto this network. Oh, there's a lot of potential total addressable market
Yeah.
that can be applied here. And so therefore, maybe I want to own some of that XRP inside of my overall portfolio for that same reason. I think that's the tipping point. At least that's how we at Franklin Templeton came about it. We just tried to figure out how to use distributed ledger technologies in the securities businesses that we're in. And
Mm.
once we unpacked that, like, oh, right, these are going to be used by lots of information-based
Yeah.
businesses over time. And so therefore, let's figure out, which ones have value and how to invest in them.
Well, you guys can learn a lot over there and learn a little bit more about what's happening because it's going to get interesting. I think we're going to have a lot of new investors starting to go this route, especially as we get more clarity into that as well. There's been a couple of reports that are starting to flow in the market right now around private credit. I don't know if you follow Michael Guyed, but he put out a very interesting tweet. And his focus here was this 2.1 trillion private credit market default rates at 9.2. So you got Blackstone in there, 6.5 billion in redemptions, BlackRock gating its to 26 billion HPS fund. So you see the elevation here. My question is, with that kind of situation happening in private credit, what happens to this capital? Where do they go?
Well, first of all, I think if there's concerns about credit in general, most of the investors, s- you know, long-term savvy investors, the stiffing out issues in the credit markets actually is kind of can be, I'm not saying
Yeah.
that's the case right now, but can be a precursor to just, other, potential equity valuations.
Oh,
Because I mean, when you think about a capital structure of a company, um, you know, liabilities sit above
yep.
equity, and that it's assets, liabilities, and owner's equity is what that balance sheet looks like. And so when liabilities become to be impaired, the question is, what may be left over for
Yeah,
equity. And
exactly.
I'm being very, very general about this. But
Sure.
it has been a long time since there was actually a credit cycle that has succumbed the global economy, right? I mean, that was the global financial crisis,
Yep.
which now measures over 15 years, not yet 20 years ago. But, we had the global pandemic and monetary policy authorities pumped lots of liquidity into the system to prevent any sort of credit
Right.
impairments
Yeah.
happening. But when the banks began to walk away from lending in certain types of markets, and that was replaced by this new private credit space,
Mhm.
it's just, this is the way the economy works. There's, credit gets extended, terms get relaxed. Maybe they get relaxed too much. There's hiccups that result, and then there's corrections that occur. It is interesting to me that alongside of the growth of the private credit market post the global financial crisis, quite frankly, most of this whole digital asset crypto industry also developed post-financial crisis.
Yeah.
And so that industry as well has not yet seen any sort of credit cycle processing through it. And of course, everything about digital assets and crypto is about massive networking. We had that bad word that we used in the global financial crisis called contagion.
Yep.
Well, I mean, everything everything in crypto is even more networked with even higher velocity of activity going on. And of course, DeFi itself is by very definition an expansion of credit related activities. It's saying, hey, you have an
Exactly.
asset. I know where your asset is. I will lend against that asset. So we've had kind of two different big expansions of credit in the economy since the global financial crisis. Private credit led by institutions who put together funds and make, you know, loans to middle market organizations. Then you've had this entire DeFi ecosystem develop post global financial crisis.
Yep.
And I think seasoned investors would probably be wise to be able to know that health of credit markets is paramount for the health of the rest of the economy by and large. And so I think we're seeing some challenges, obviously, in what's happening with AI and how it's impacting software companies. It's, we're probably going to see that begin to trickle through a number of other different industries.
Yeah.
Maybe some of those aren't as indebted as some of these software companies. But credit signals are important to pay attention to as it relates to the health of the economy, and monetary policy authorities are absolutely watching with interest about what's going on in the private credit markets.
Well, that market though, in comparison, I mean, you have to remember all of crypto today is like 2.3 trillion. So the comparison is quite a bit different, and also I think the key here is, we're seeing both silver, of course, is imploding right now. Gold has been down. We're starting to see some pressure on metals. We're seeing pressure now on private credit, and you're not necessarily seeing movement into digital assets just yet. So I'm kind of curious, where do you think this liquid is going?
Well, I do think that digital assets still represent, especially the benchmark digital asset, Bitcoin, still represent risk on, risk off type
Yeah.
of opportunities by and large. And so if the market is signaling, hey, there's some questions or concerns about some of the credit markets that we're going to need to understand a little bit deeper,
Yep.
I don't think they're going to rush to another risk on asset. They're likely going to be sitting on the sidelines for a little bit until there's some understanding about how deep these issues may be. I mean, look, the asset management business is really good about putting together products and services. In private credit, they're wrapping products that are generally illiquid. The underlying loans are illiquid, and they've come up with the constructs of having interval funds to help you know clients get access to these important investment opportunities, but yet at the same time kind of understand that the market dynamics do not allow them to, every time an investor hits for a redemption, that they're able to liquidate the underlying portfolio. So far it feels fairly manageable
Yeah.
with the actors that are currently involved, but it's always wise to pay attention. It wouldn't be my natural expectation that if this one large market of private credit is having hiccups, that investors will immediately transfer, oh, maybe instead of putting money into private credit, I'm going to put it into something like the digital assets, until the digital assets prove that they have lower correlation or some other investment benefit
True. Yeah.
that they
True
might
hedge
not be getting.
narratives.
Yeah.
Yeah. I would agree with that. Yeah. Because hedge narratives are important. You would think, though, that you'd think metals would have that narrative. And I'm surprised that we haven't seen a correction on metals right now, especially with gold and silver.
Well, yeah, my expertise in prior to coming into helping build infrastructure and our digital asset business, Franklin Templeton, was all in the fixed income business. And so I
Yeah.
had almost 35 years of experience just in the fixed income market. So my expertise is going to probably speak more about the credit activity as opposed to the metals, but it's
Yeah.
interesting times for sure.
That is for sure. Listen, we also have the Clarity Act brewing very tightly. Tim Stott was on stage yesterday. He said, I expect something on my desk by end of week. Now, is that going to be a draft? Is it going to be a sketch? It might be on a paper napkin for that matter. What do you think is going to happen now with the pressure coming in from the White House around the banks with yield. What do you think is going to happen next?
Well, look, there's a lot of pressure. There's a lot of lobbying support on behalf of the crypto and digital asset industry toward these outcomes. Far more support from those entities than there is from the legacy, SIFMO or the ICI, which is kind of the Investment Company Institute, which governs the trillions and trillions in mutual funds. And so I think they're going to have the loudest voice at the table. If people who are long-term thinkers, they're if you think about what we just talked about with a credit cycle, the way that we cure historically credit cycles have been to, reduce rates, try
Yep.
to get the banks to lend more activities. This idea that, that they'll be doing some additional thing that might impair banks' ability to help monetary policy authorities dig out of potential, credit hole environments. I mean, these things all have to be contemplated in a serious way. We know that historically that, the transmission mechanisms through the multiplier effect, we go back to your econ textbooks and financial market textbooks about the Fed injects money and then the banks use it in a multiplier effect, to be able to lend money to moms and pops and small businesses and the entire economy in general. That is, I think that's what they're rightfully pointing out is a concern relative to should we get to a place where there's going to be loopholes and a lot of yield bearing stablecoins who don't necessarily serve that function in the economy. And so I think we have to be measured in how we're building the economy best for the long term. Quite frankly, understanding these dynamics about how money and monetary policy actually is invoked and actually works throughout, repairing economies that might be somewhat impaired. And I mean, that's not the case of the United States right now. I actually think,
Exactly.
we're in a situation of glass half full, but there's a number of risk factors that come to bear that the bankers themselves are, quite frankly, rightfully pointing out about
Yeah.
the utility that they serve.
Well, and we're dealing with a very tough market as well. You've got Powell coming out with no rate change yesterday. You've got a war in Iran brewing. Now they're going to the Senate and to Congress for more money. It's likely that this is going to be a longer campaign, which means that this could also trickle down into inflation. Job numbers aren't looking good. So the economic macro is still very stacked against the market. How do you play this market out for the rest of the year?
Well, you're asking maybe the wrong person about specifically about that. I mean, look, I think there's great investments to hold for the long term. And rather than, be super transactional in your portfolio. I mean, I think you're wise to protect assets that need to be protected in the near term. There's just a
Okay.
lot of, as you point out, a lot of uncertainties. But
Yeah.
in my almost 40 years of investment experience, that statement you make can be applied almost all the time. There's all these uncertainties.
That's true.
You
You're
know,
right.
I think there's some very thematic things happening. There's maybe, a over exuberance in the valuation of some of these AI companies, but I really see and witness it firsthand as a business person how we're using AI tools not to replace others, but to increase the productivity
Yeah.
of our teams and improve our outcomes, our business outcomes, and our business acumen and our business intelligence. All of that feels super powerful for across the economy. That feels like one of those trends that, where we focus on the valuation of the AI companies themselves, but it's really the transformational activities that the AI kind of, can I call it a service
Yeah. Mhm.
that complements the things that you're doing that likely is going to, help dampen any inflation pressures that may occur from these kind of military conflicts that seem to be expanding in different parts around the globe. So it feels like there's a pretty big balancing act that's going to occur on that. And I know that Kevin Warsh, the
Yep.
the hope to be, Fed chairman at some point, at least from President Trump's perspective, uh, kind of has that same sort of feeling. But that's just been my, after 40 years of investing in fixed income markets and watching where short-term rates are, long-term rates and productivity through various waves of technology, this one seems to be as big as wave as any we've ever faced. And so I
Interesting.
think that's going to portend a lot of positive things for the capital markets, quite frankly, over time, as when we look back.
Yeah, for sure. Well, I'm looking at trackers right now on the ETF. Let me share this screen with everybody. And you can kind of see it. The market moves very similar to what we have been seeing in terms of news cycles. 3 days up, then of course we saw the outflows happening yesterday. So that happened with Bitcoin. If you look at Ethereum, kind of a mirror there. Not quite as much activity in the last week, but it did have some pretty good end days. I know Tom Lee's still buying out there, and you have Saylor talking about buying. So it's definitely setting up for a very interesting summer coming in soon. And if clarity does get done, which I think it will, I think it's just a matter of time. Where do you put clarity right now? If you gave it a percentage, Polymarket's got it at like 60+% right now. Where would you put it?
How am I going to be different than Polymarket? I'm sorry, Paul.
Hey, man,
Polymarket
I
incorporates
think
a lot of
Polymarket's wrong.
information.
I think it should be higher.
Yeah.
I think it should be higher.
You
But
putting a bet in there yourself then?
I might have something in there. You never know. I might do a tasty taste. You never know. Anyway, speaking of that, you guys know what to do. You can find Roger over at Franklin Templeton. I showed his website earlier. They got a lot of activity over there, so check them out. Roger, thanks so much. Where can you be found on social? Do you do social media a lot, or what?
You can find me on LinkedIn. The rest of the social media, I let my business partners, drive those channels as much as possible, but you can find me on LinkedIn.
There you go, my man. Thank you so much for coming in today. We appreciate it.
Thanks, Paul.
You bet. All right, guys, you know what to do. If you have not subscribed to this channel, make sure and do that. Of course, you can also jump into the membership program, which is basically just access to early content. And we also drop some live streams over there. So check that out. I know you guys have been asking about that. Let's do more lives. Let's do more Q&As. Everybody's always asking questions. We get a chance to, interview hundreds and hundreds of the greatest minds out there in the industry every year. So we do learn a lot from them in terms of how this market is heading, but definitely some of the trends that you should be watching. So do that. Of course, we will catch you next time right here on the XRP Pod. Take care.